Hi, everybody. This is Ryan Olson, a Mustang Private Wealth certified financial planner located in San Luis Obispo, California, helping you build wealth with clarity and confidence. Today, I'm going to talk to you about the 5-year rule in Roth IRAs. Now, this is commonly misunderstood, and I recently had a client reach out and ask about doing a Roth conversion after the age of 59 and a half. So that got my wheels spinning. There's 2 5-year rules when it comes to Roth IRAs. And the good news is once you understand the rules, that complexity is all out the window and you can start to make some decisions about whether or not the Roth conversion is the right thing for you. All right, so what are the 2 5-year rules? That's right, not just one, but 2. They apply in different ways. Rule number 1 has to do with your contributions. And that determines when your funds that have been contributed to your Roth IRA can be withdrawn without a tax penalty. So we've got contributions, now we've got conversions. The 5-year rule applying to conversions. When you move money from a traditional IRA or a 401k into a Roth IRA, pay the taxes on it at that point for the tax-free growth later on. Most of the confusion comes when we don't know which rule applies to our situation. So let's talk specifically about after 59 and a half, how the rules change. So if you're over the age of 59 and a half, this applies to you. If you're considering a Roth conversion, this applies to you. The good news is this is pretty simple. Most people miss this, but once you turn 59 and a half, that 5-year rule, it basically goes away. Now here's the part that most people miss. Once you hit 59 and a half, the rule basically goes away. And if you think about that logically, it just makes sense. The IRS levies an extra 10% penalty on any distributions from Roth IRAs, 401ks, IRAs, 403bs, when we're below that 59 and a half years old. So when we do a conversion, it just makes sense that that rule's out the window. Now, I'm going to pause right there. If you are over 59 and a half and you're considering the Roth conversion, you need to be committed to a time horizon that's going to allow the tax liability that happened when you do that Roth conversion repopulate or regrow. So you get that interest back and you are going to, benefit from actually paying the tax bill now. So that's the first thing you need to figure out. What's your intention of doing this? Now, if you're in a tax bracket that allows you to do maybe some smaller Roth conversions and stage it over 5 to 10 years or even 15 years, if you're 60 years old now, your required distribution isn't going to be required in your IRA until you're 75. So that's a long time, right? And if you watch my other video about Roth conversions, what we talked about there is the fact that if you're investing in the stock market in any retirement account, you're symbolically making a choice and saying that I believe the stock market or real estate market or whatever we're investing in within those vehicles is going to do better than just keeping the money in the bank. So again, and you need to visit with your financial advisor. You should be consulting with your CPA or tax professional. It can make a lot of sense if you have a time horizon that supports the exponential growth that we expect to see in the markets over that 10 to 15 year period. So back to that 5-year rule. And basically this rule was designed to keep younger investors from converting money or contributing money and then immediately pulling it back out. So it's incentivizing us to keep the money in there longer, which also just makes sense. Basically, if you're under that 59 and a half, each conversion that you make basically has its own 5-year clock. The clock starts over when you've done the conversion and you have to wait for that specific conversion 5 years before you can withdraw penalty free. And again, that penalty only applies if you're under 59 and a half. So here's a simple test that you can ask yourself to determine whether or not you're going to face penalties on contributions or conversions if you're under 59 and a half. When did I do the conversion, or when did I open my Roth IRA, and when did I start putting money in? If the contribution happened 5 years ago, or if you're over 59 and a half, then you've crossed the finish line with those monies. You can withdraw contributions, conversions, and earnings all tax and penalty free. So here's the bottom line. After age 59 and a half, the conversion 5-year rule doesn't apply anymore. The only clock that matters is how long your Roth IRA had existed. The great news is because it means you have more flexibility for tax planning. Talked about that a little bit of your time horizon and your required minimum distribution. Again, consult with your tax professional. It's important that you're making these decisions not in a vacuum, but with all the information you can possibly have. If you found this information helpful, go ahead, like the video, please subscribe, share it with somebody you know who is maybe nearing retirement or planning for retirement or considering doing Roth conversions, and we'll be happy to help out. One of the things we will offer is a no obligation, personalized video, pre-recorded video call, which will analyze your current financial situation. Keep it under 2 minutes. We'll send that over to you. We just need a few basic pieces of information. There's a link to that in the video description, and we're happy to help out. Again, this is Ryan Olson with Mustang Private Wealth. We are looking forward to hearing from you. Drop a comment if you have more questions or if you'd like to see a video on something else. It would be helpful. Have a great day.